Welcome to today's webinar, all about closing out 2024 and some tips to maximize 2025. My name is Michael Clark, certified financial planner with Raymond James. Here to talk to you. If you have any questions, you can always send me an email. You can always jump on a call or do a meeting. So, one question I get a lot during this period is, all right, well, how did last year do? And then what are y'all thinking about for 2025? So that's what we're going to address. And we're going to walk through some of the, tips and some things to think about as we go into this next year. Also discuss a little bit of the limits. So just kind of some planning for this next year. Now, let's start by looking back at 2024. So obviously now's a great time to take a look at not only your statements, but just your financial picture, just because it's a nice time, it's a nice snapshot, if you will, in time, because you can look at the past 12 months. How much did you save? How much did you earn? How much did your investments cost? It's just a nice period to say, all right, how did we do in 2024? We can also do that with the stock market, bond market, other key ways to invest money. And that's what you're seeing up on the screen. So the bond market was up about 1.5% last year. So bonds did, I would say, okay. They were positive, but bonds were certainly kind of up and down last year, a little bit rocky for bonds. The stock market was up over 25%. And when we talk about the stock market, there's a couple different ways to look at that. This is the S&P 500. So think of it in terms of the 500 biggest stocks in the United States. It's like Microsoft, Apple, Tesla, JP Morgan, those types of companies. Collectively, they did really well last year, up a little over 25%. And then international, that collectively was up just under 4%. So think Nestle, Honda, Toyota, Taiwan Semiconductor. Those are all big international companies. Most investments are linked to all three of these in some cases, if not just one of them. So I like to take a look at, well, how did the markets do last year? And it really depends on, ultimately how much risk you took and then where you took that risk. Was it in the US market, international market? Was it in the bond market? Did you do something more, conservative or even guaranteed like CDs or money markets? So again, this is just a little snapshot. So chances are your returns were probably somewhere in between these. Now, when we look at planning for 2025, when we plan on, the next, call it 365 days, there's some limits just to be mindful of. And these limits are important if you're on the accumulation side. And then there's other limits to be mindful of if you're on the income for retirement side of things. So there are certain limits that allow you to put money into a group retirement plan. So think 401k, 403b, those types of instruments. So if it's of importance to you to hit the limits, here they are up on the screen. If maybe you don't have one of those plans, or maybe you're saving on your own, then you might have access to an IRA, individual retirement account. There's some limits there. And again, when I show this slide, I know it can be pretty confusing because there's a lot on it. And I'm always not making fun of my industry, but we do have a lot of terms and a lot of jargon, and there's a lot of confusing things with limits and taxes and investments. So if you have questions on anything relating to this, feel free to use me as a resource. For those of you on Social Security, married, filing jointly, 44,000 of income is important, because if you can remain under that, then taxes on Social Security are not as big a deal. If you make over $44,000, then you need to worry about taxes. Medicare, we'll keep going with the married filing jointly. If you make over 212,000, you're going to pay a little bit more in Medicare premiums. If you could stay under that limit, you pay that what's called the base premium. And then for those of you that might itemize or take the standard deduction, you can see that for tax purposes as well. Again, some other limits on there just to be mindful of. Some of them apply to you, some of them don't, because again, it really depends on what stage of life you're in. And again, if you have questions about that from a planning perspective, feel free to let me know. One question I get during this period a lot is, all right, Michael, what do you all think the market's going to do? What does Raymond James think? What do you think personally? And I've been doing this about 17 years now. And unfortunately, no one has a crystal ball. There isn't a magic program I can run or some sort of magic formula where I can say, oh, this is what the stock market's going to do. And so I don't put a lot of weight in a lot of the predictions. And I have some history here just to walk through that. Some are on the market, some are on a stock here that we'll look at in just a second. But I don't put a lot of weight into it. Again, and I don't put a lot of weight into it just because I've seen them not be that accurate. And I encourage you to focus on the things that you can control. So that last slide was a good example of that. If you're accumulating money, making sure you're accumulating it in the correct account, making sure if you have a match at your employer, you're getting the match. If you are trying to max out your accounts, make sure you're hitting those limits. For those of you in the income in retirement stage of life, making sure you control which bucket of money you're taking out of. Are you taking out of your Roth, maybe your after tax money, maybe some of your pre tax money that counts as ordinary income? How do you position your investments? Is that in, certain strategies that are better for taxes? How much risk you're taking? The Medicare that we talked about, making sure your income's in line with that and making sure you have the correct Medicare policy. If your doctors have changed, your prescriptions have changed. And I could go on about all the things that you can control. But unfortunately, one of those things that we just don't have any control over is whether the stock market goes up or down. To illustrate that point, though, let's take a look at a single company. And this company, you might have heard about it. It's Enron, and it goes all the way back to 2001. And what we can do is we can look at what the big banks and big forecasters were expecting on this company called Enron. Now, for those of you that might know history, you might have seen this in real life. You might have experienced it. It basically was a scandal. It was a huge energy company, one of the biggest companies in the United States. It was in one of the top 10. It was top 10. And it absolutely fell off. And we saw it basically go bankrupt because of the scandal. And so we can go back to 2001. And this is 24 years ago at this point. And it was trading about $61. It was a strong buy at Lehman Brothers. A little ironic. Lehman Brothers eventually went out of business in 2008. Goldman Sachs called it a recommended list. It was on its recommended list. Merrill Lynch was a buy. JP Morgan buy. Goldman Sachs raised their price target or their estimates on it. So things looked really good, but you can see the stock price starting to decline, but everyone is still very positive on it. The forecasters, again, are not correct. And hindsight's 2020. We know this, so we can take a look at it. But price continues to decline. Still, Bank of America, Goldman Sachs, attractive at Bear Stearns. Finally, Merrill cuts it to neutral, now trading at $40, continues to slide. And then by the time it gets down to $16, JP Morgan still says buy. Prudential's at sell at this point. Still a buy at a couple big banks. Strong buy at Lehman Brothers. Stock continues to drop. $9 now, $10, something like that. We get some, holds, maintain position type thing. And it just keeps going down. Goldman Sachs, Edward Jones now finally say when it's at $5. Again, we started off at like $60. Now they're saying to sell it. Not a good investment. And again, this is just one example. I have a whole bunch of these types of examples from over the years where these forecasters that, again, I know everybody wants to see that crystal ball, kind of see what everybody's thinking. And so again, I don't put a lot of weight into it, but just because I get that question so much, here it is. Here's what everyone's thinking about for 2025. And some of those names that I just picked on, and again, I wasn't necessarily targeting certain people. Again, I have plenty of examples on forecasters being incorrect, but some of them are on this list. On average, Wall Street thinks that the S&P 500, again, going back to those 500 biggest companies, will be up about 11% in 2025. See, there's one company that thinks it'll be negative, but by and large, most people think it's going to be a pretty decent year. These are all, I would say, Raymond James, competitors or some of our partners. Raymond James as a whole thinks the market will end up about 6% or so. So a little bit softer year than we had this year, but still a positive year and still a good time to be an investor. Again, take it for what it's worth. Again, I don't put a lot of weight into it. I'm more financial planning driven, where I want you to focus on the things that you can control. Again, taxes, taking income in a correct and responsible fashion. And again, more going back to your financial plan as opposed to, oh, so and so said this, so I'm going to position my money accordingly. And again, this has been going on for years and years and decades. Things change in the marketplace. And we don't have to look too far to just look at the top companies, the largest companies by the decade. And I find this data really fascinating. So when we look at all the way back to the 80s, you can see the largest companies in the world: IBM, AT&T, Exxon, Shell, General Electric, Kodak. And then you can see in the 90s, there's a lot of Japanese banks. 2000, that was right around the tech bubble. Tech was all the rage. Microsoft was the largest company, General Electric, Walmart, still some names that we have today. But what's interesting, you look at the biggest company in the entire world, it changes every single decade. So it's kind of hard to think that, right now it's, Microsoft, Apple, those types of companies. So to think that in another 10 years, those will not be the biggest companies. Well, when we look at history, it does change every single year. And it is pretty amazing, but it is a changing environment. It's a changing world. And one example that I've been telling people about, just because it is, again, a different environment, you can't just buy a bunch of stuff and then hold it forever. That can be a decent strategy. You don't want to be jumping in and out of stuff. But to illustrate that point, I've been talking a little bit about this guy. This guy's Tom Brady. Obviously, a huge career. You look at just his legacy and how long he's been playing. When he first started playing, it was in the early 2000s. So kind of near the end of that last chart. And he ended his career just a few years ago. He had a really long career. And when you take a look at some of the companies that have come and gone during Tom Brady's long legacy, it's pretty amazing. So you take a look at this list, a lot of these companies were thriving during the start of Tom Brady's career. To put it another way, Tom Brady's career lasted longer than some of these companies, and the companies that were very, very popular, or one of the largest companies in the world in the US, were out of business by the time Tom Brady retired. Tom Brady outlasted some of these large US companies. And again, some of these you'd think would be great investments, but it illustrates the point that you can't just buy and hold. You can't just buy the index. You need to have a strategy in terms of how you get in and out of stuff. And just because it seems like a good investment doesn't always mean that that works out. And again, we see that changing when we look at it decade by decade. Again, we have 2010 and 2020 here, and then we're halfway through this decade. Apple still remains number one, but we have a couple new people or new companies coming up in terms of being the largest company in the world. So it is hard to fathom that Apple, Nvidia, Microsoft, Google might not be the biggest companies in the entire world in 2030 or 2040. Very hard to wrap our head around that. But when we look at 80s, 90s, 2000s, 2010s, that's exactly what we see. We see those companies switching. Again, we need to be nimble with our investments. But again, I think it all goes back to controlling the things that you can control and try not to get caught up in the noise of the media or the noise of the forecasters right this second. So again, I think it's very easy to say, hey, what does the crystal ball say for 2025? And should we reposition or should we do certain things? I think another temptation right now is to say, all right, we had a great year last year, which means we're going to have another great year this year. We might, but it doesn't always work that way. Just because this happened and this happened does not always mean that this happens. It's not 2, 4, 6, and then the next year's 8. There is no pattern to the market. So again, we need to go back to controlling the things we can control. And I think a really good example of that is our next workshop. Our next workshop is taking place at the Winter Park Library. And I'm talking all about ways to protect yourself in a digital world. I'll talk a little bit about freezing your credit, why you might want to consider doing that. And then I'm going to touch a little bit about just some general tips that are very exact on, hey, these are the things you should be doing when it comes to, again, protecting your identity. There's not anything you can do to prevent identity theft, but there are a series of best practices. And that's exactly what we've built that workshop all around. So again, love to see you there. Winter Park Library, taking place on Tuesday, February 18th. Kicks off at 5:30. I'll have some clients there. Winter Park Library will have some patrons there. And then that's also a good one for you to invite friends because, again, it's just fully information. And there'll also be a handout that you can pick up at that event. Well, if there's anything you need, feel free to reach out. Again, I know we covered a lot, especially on the limits for this next year. And then we also unpack some of the history together, which I know some people really like. So again, if there's anything you need, if you want to chat with me about any of this or anything in your life with a dollar sign, don't hesitate to reach out. Bye, everybody.